This is It's Your Money, and this is that was yesterday. It's your estate, and this is week 6. I'm getting tired. And we're going to talk about estate administration. And so we're going to do this. I'm going to go through and continue to monitor questions. And I don't see Jenna sending in her information. I'll send her a note. And Pete, take it away. I'm going to monitor the Q&A, so I'm going to disappear, but I will come back.
Has the video started?
Of course it has, Pete.
All right.
So after the recorder, it says recording.
Okay. I don't see
Bye.
that.
Thank
Okay,
you.
yeah, I see it now. Okay, we're getting a little dingy because this is our last session, one of 6, and we've gone through what is an estate plan. We went through specifically the Advanced Healthcare Directive. We went through the durable power of attorney. We had an entire session on a living trust. We had an entire session on retirement plans. And we also had an entire session on charitable planning opportunities. And so today we're going to talk about what happens, who is going to be the person that's going to be taking care of you if you suffer from some sort of incapacity or you die. Not the good thing, I guess, is because, but all of us are going to die. So all of us are going to need somebody to do the administration after our death. But the important thing is, from my point of view, is to have somebody there if you suffer from some sort of incapacity. Richard Huntington is a professional fiduciary. I am a professional fiduciary as well. We are both licensed in the state of California. Richard, how long have you been a professional fiduciary?
I've been a professional fiduciary since 2007, and they started licensing in 2009.
Yeah, I've been a professional fiduciary for approximately 25, 30 years prior to licensing. So, so we have some experience dealing with incapacity and death. We serve in multiple functions. You want to go through those quickly as to what they are?
Sure, yeah. We can serve in the role as an executor or an administrator, and that would be through the probate process. Also as a conservator of the estate or conservator of the person, and that's through the conservatorship probate process. We can also serve as agents. So an agent for a power of attorney of finance, agent for the Advanced Healthcare Directive, and then also a successor trustee on a living trust.
And all of those positions require fiduciary liability. What does fiduciary liability mean in our role as in those positions that you had mentioned?
A lot of it's going to be a prudent man rule, and also what is an average standard that is acceptable.
Yeah, we're going to get into that in a little bit more. How do you charge, Richard?
Usually, if it's in the role of successor trustee, it's going to be a percentage of assets. It's roughly a 1% while the trustor is alive and incapacitated, and then it's a little bit under 2% during the administration after the surviving spouse has passed away.
So, and do you have an hourly fee?
Yeah, hourly is at $2.10 an hour if it's an hourly charge.
And then so let me expand it. My fees are $250 an hour for hourly charges, but most of the time it is a percentage. It's 1% while you're alive annually, and then it's in the year of your death, it's a little less than 2%. Private fiduciaries, the professional fiduciaries, there's approximately a little bit over 1,000 that are licensed in the state of California. And we'll get into that a little bit more. And then there's approximately between 70 and 100 private professionals here in Orange County alone. And we'll talk a little bit how you can access them. Most of you are going to use a family member. I would say 80%. What would you say?
Yeah, that's a good estimate.
Yeah, and it's just an estimate, but most of you are going to have a family member be this either the executor, the personal administrator, the attorney in fact, the healthcare agent, or the successor trustee. The key is to know is that whether you're a professional or whether you're a lay person, you're all subject to the rules. And just like in a driver's license, you have the DMV rules. In probate in this area, we follow the probate code. Those are our rules, and we'll get into what some of those are. So let's see, neither one of us sell or give or take referral fees, and it's all about taking care of the client as best we can. So let's go to share screen. And Don, I want to add, because you have so much experience in this area as well, if you feel that we're not communicating on one thing or another, please pop up and give us your opinion and knowledge and wisdom. This is no two people are alike, and everybody's a little bit different. So here's our contact information. Feel free to email us at any time. I prefer email, and this is my cell phone. So Richard, that's our office number under Richard, and this is our website. We run into so many experiences where people don't understand the probate code. We're dealing with money. A lot of times people equate money with love. And so we're sometimes brought in as the professional to, like I said, sometimes to separate the family out so they have a neutral individual handle the estate so that everybody can dislike the fiduciary and it brings the family together. Because there's an immense amount of emotions going on, and we're not involved emotionally with the specific family who has just died or become incapacitated. And there are lots of rules of the road, just like you do when you drive. And a lot of times family members do this for the first time. So we have created the outline that we're going to go through in just a little bit to share with whomever you have named in your documents so that they can understand what needs to happen. And it'll help you as well in selecting an individual within the family to be the estate administrator, so to speak. There are going to be costs associated with this, no matter if you have a family member or a professional. One of the advantages of having a professional is that we've done this rodeo before. And if you name a family member, most of their mentor or coach in guiding you through this is going to be the law office, and the law office is going to charge you their normal hourly rate.
So
Yes,
what
Doc?
I'm going to do is I'm going to be Pete in presentation since he's the presenter today and say, next slide.
Okay, thank you. So what happens when someone dies? Richard, why don't you take this?
Yeah, so we got to decide, what kind of planning has that person done? Do they have a living trust? If they do have a living trust, we got to find out if the assets were titled in the trust. And if there's some assets that are outside of the trust, then they might be probatable assets. There is a limit for a small estate affidavit, and right now it's at 184,500. And so if you're below that watermark, then you can have a pour over will and have a small estate affidavit, and those assets can fall into your living trust.
So the main thing is that we have to determine, how do you have title to your assets? So we try to list the assets that you have and put title on there, because we can put on various hats. We can put on our probate hat, or we can put on our successor trustee hat if during death. If it's from incapacity, well, we can't touch your IRA account unless you have the document of the durable power of attorney for finances, and who have you named in that document. So it's really depends, much of this, on how you hold title, because we're going to go, whoever is your fiduciary, we got to go out and get those assets, and it's called marshaling.
So
How do
Pete, Pete, let's go
Yes.
to the next slide, because we're getting questions on what if I don't have a trust? Thank you,
Ah.
Pete.
Yeah, see, I knew you were going to be helpful today, Don. The voice, Wizard of Oz. Okay. So you had mentioned, Richard, that if someone dies, what happens?
So if you haven't done any planning, then you're going to be in the probate process. And so you're still going to have to list all your assets. We're still going to have to figure out what it is that you have. We're going to have to open up a court probate. There's going to be an administrator and executor assigned. They're going to need to be bonded, which is important too. We'll get to that in a minute. And then there's also an attorney. So you're going to have an attorney that's going to be representing the administrator or the executor as well.
Yeah, because they have to file a petition with the court in order to say, hey, this is the person who's been deceased. This particular person has no will, or they have a will. This is the personal, by the way, if you name an individual in your will, they're called an executor. If you don't have a will and it's through intestate succession, then we call you a personal administrator. And then you have to be approved by the court. And the court looks to how old you are. Are you a resident of California? Are you bondable, etc.? But just because you named the individual in your will, that does not mean that they're going to serve.
So the answer is that if I do not have a living trust when I pass away, and my estate's over $184,000 gross assets, not net, gross assets, then I'm going to wind up in probate.
Correct. Thank
So,
you for
okay.
explaining that much more clearly than I did.
And I'm sure that there's really the delay in how long does a pour over will last? The answer is you're dead. And so therefore it's how long it's going to take to probate the estate.
Yeah.
Or to avoid probate. Get it done.
Yeah. The sad part where we see is somebody did a beautiful trust, and then we just got one just the other day, and very well drafted trust, and all the assets are titled in the person's own name.
Yeah.
Not only that, but they named their personal doctor as their fiduciary, their executor. And as a doctor, he doesn't want any part of it. So we're going through all sorts of machinations. And this is where the pour over will comes in very handy, because now we got to go through probate. The beneficiary under the will is the trust, pours over into the living trust, and then we have to administrate the trust.
Is this all true also with a spouse? So if first to die, if there is no will, no trust, no nothing, is it going to go to the spouse?
Correct.
Files a petition may be needed, but yes, it will move over. And
Yeah.
again, we're back to titling.
Yeah, it's title. How you have title is just so important.
Yeah.
And you make a very good point, Don, on the first death between spouses. There is not that much to do. So, but there are some things that you need to take care of. Changing title, have your trust reviewed, go to the bank and get your corrected title back to your own name or to the living trust. And by the way, when your spouse dies, this is the most important, I think, to have a living trust, because now you don't have someone there to help you that is on title with assets, and nobody can do anything without having the legal authority to do it. And every institution that you go to collect money or to change anything, to pay a bill, to cancel Cox service, to
Get the mail.
to keep the lights on.
Yeah.
All of that requires legal authority to do so. And if you don't have any of these documents, you end up under a conservatorship.
Yeah.
And this is what you don't want. This is
Yeah.
the open heart surgery, to use an analysis with medical as far as the legal help is concerned. Let's go to the
And before we do, and so when we talk about the $184,000, if I have a beneficiary designation, that keeps it out of probate because it jumps automatically over it.
correct.
So that is not included at that amount. Okay.
Again, it passes by title. So, and the POD, or paid on death, is a beneficiary designation. It's a contract. So yeah, no probate. Just don't manage your entire estate that way, because it doesn't allow for any kind of flexibility. So, but yeah, PODs are awesome for a smaller amount.
Yeah, and also thanks, Don, too, is that on the beneficiary designations, you want to make sure you have that correct on your IRAs. So as soon as you're thinking of title, also think of your beneficiary designations as well, and check them, make sure they're correct.
Cost of probate, Richard.
Cost of probate, it's pretty expensive. You can see by the chart there, when you add that up for the first million, it's $23,000 for the executor, and then also for the attorney that's representing the executor. So you've got $46,000 of fees, and then just a quick measurement of anything past that. So for the next million, you just add 20,000 to each million. So you're going to have another 10,000 to the executor and another 10,000 to the attorney. So I guess a quick math for a $3 million estate, you're going to be looking at $86,000 total.
Yeah. An attorney can charge less, an executor can charge less, but this is the maximum that can be charged by statute just based on a percentage. There's also sometimes what's called extraordinary fees. For example, the sale of real estate is considered extraordinary, and therefore most courts will allow the attorney and the executor to add fees to their standard percentage fees. So the question becomes, I think, for family members, is the family member going to do this at no charge? I think, or should they be paid? Use this chart to kind of say, hey, I'm a family member who's doing it, has to do a lot of work. And are they going to be paid or not paid? Just if they are paid, it is earned income to them. If they're not being paid, I hopefully the rest of the family really appreciates what the person is doing, because it is it's in many ways, it's a very unthankful task. And the other family members who are not doing it don't really appreciate the effort and the liability that the individual is taking on. So let's go to the next slide. and I'm in control. So a lot of times we get, okay, let's.
And Pete, incidentally, sometimes you're talking with your hand, which holds your mouse. So your mouse is zooming all over the place. So don't be something and
Sorry.
let
I'm
go of the
half
mouse. It's
I'm
hard
half
to train
Italian.
people at this point.
I have to talk with my hands.
Yes.
I was in Ireland just recently and visiting my grandson who's 3 years old, and he's just learning how to speak. And when he can't think of the word, he puts his hands near his ears. And I feel like he got that from his DNA, you know, so my hands constantly move. So what is the difference between the executor or the trustee, Richard?
They're very, very similar. I mean, you really are going to be doing all the same things. You're going to be locating and valuing the assets. You're going to be paying creditors. You're going to have to take care of the taxes, and ultimately you're going to be distributing the assets when everything's done. It's just you've got the court involved now. So we're going to have to follow some procedures of the court and instructions from the court, and possibly some time delays. They're really setting out these procedures are really getting scheduled far out in advance. So it takes more time, but we still have got the probate code that has to be adhered to in both scenarios.
Yeah, but just take the first one. Is it always easy to locate and value an asset?
No, it could be a scavenger hunt. It really can be. We find sometimes that in the later stages of life, you start kind of squirreling away things. You might throw some cash inside of a book, or you've got your expensive jewelry hidden somewhere and you haven't told anybody, and or trying to locate financial statements, if it's not all organized in the office. How much have you been doing online? Are you getting statements in the mail, or is it just online? And where are your passwords at? It could be quite challenging.
But valuing assets, let's say if somebody has a limited partnership.
These are great things, Pete, that we're going to discuss in the next few slides.
Oh, thank you again, Don.
No problem. So the difference between executor and successor trustees, the court's involved in it, so we can actually move on.
Thank you.
Thank you.
So I'm so happy that Don is here with us. What are the qualities of making a good trustee? By the way, this is what I would use if I was naming a family member.
Yeah.
Okay. What person in my family has the time? How much time does it take, Richard?
It could be an immense amount of time, at least up front. As soon as you get started on a case, there's a lot of time involved, and you got
to change the assets title.
You got to find the assets, change assets. You got to start capturing the mail. Be on the phone for a couple, 2 or 3 hours with Chase or Wells Fargo. You got to make an appointment. Then they want to see your documents when you go in. They want to see your driver's license, and then and then you find out that they don't accept the document that you thought that they would accept, and then you got to start the process all over again. Yeah, and these are all daytime actions too. So if your son or daughter is going to be the trustee and they're working full time, they're taking time off work to take care of these chores, and your grandkids could be maybe in college by then. So they're really hustling to try and make some money to kind of support their own household.
Desire. Why is that?
Yeah, you gotta, there's a lot of stuff to take care of, to marshal, and you have to have the desire to follow through on this.
What if you name a family member and they dislike other family members? All kids don't like each other. Some are busy as a CEO of a corporation, and the last thing they need is to settle an estate. We get named in documents that nobody's ever told us about. So check with somebody and go through this outline with them so they understand what they will be doing, especially at incapacity, because it takes an enormous amount of time. Yes, Don.
I'm just thinking of how many pages we're going to get through, given the stories and things that we're going to touch on later, Pete.
Yeah,
So they should have
through
a desire to do this. It isn't
Yeah.
a nice thing to do to your family members. They should want to do it. What's proximity mean, Pete?
It means distance. I mean, I don't think you can be somebody else's fiduciary if you're out of state. I think it's even difficult to do if you live in another county, especially under incapacity. Maybe if you're deceased, because eventually everything works out. But I think you need to see the person on a regular basis.
So Richard, why is organization important? Keeping us on track?
Yeah, you got to be very organized. So there's a lot of rules about this and duties for a trustee, but you need to keep everything separate. So each case that we have is separate from any other case. It's separate from our personal stuff. And you've got to have your systems in place. So
yeah, better know your QuickBooks.
Yeah,
You know?
yeah, exactly.
And you don't have to do all of it, so you should be able to delegate.
Yes,
Mhm.
that's right there. You know,
Why is communications important?
Well, we don't like to have that pillow talk, with the kids kind of wondering what's going on, where's my money, and so you got to keep them up to date and give them a reality of how long this will take.
And is there a standard of care to this, Pete, since you've moved on?
My computer is acting up, so I would like for you, I'm going to have to shut my computer off and come back in. So why don't you both take over and I'll be right back as soon as I can.
All right. So
But I got to share screen.
You're the screen person, yeah. All right. Well, Pete will be right back with us in a minute. Oh, there we go.
There you go.
Oh, nice.
So yes,
right.
Don has it going in the background.
So the standard of care, it's this is kind of that prudent man rule. What is the standard of care? And you have to have a reasonable care, a certain amount of skill. You're looking for someone here with a business sense would be helpful. And like we talked about, having the time, the desire, and the organization to do this. So you're going to be held to the standard as if someone were to look at your work and what you're doing. You don't have to be an expert. It's a good point. So, just a person that has the follow throughness of going to the bank and marshaling the assets and taking care of their mom or dad or whoever the client is. And then being able to report everything. You need to be accounted for every dollar in and dollar out of the estate, and be able to show that to all the beneficiaries.
So if the beneficiaries object to something you've done, do you have a personal liability in this?
Absolutely. So that's the other side of it, that anyone can object. You're going to be supplying an accounting to all the beneficiaries. So if Johnny, the oldest son, is the trustee, and Mary and Susie have that opportunity to object and said, where'd this $100,000 go, and why is it going towards a new car? And so that objection then can be brought to an attorney, and sure enough, an attorney would say, yeah, you've got a good case here. Let's take this to court.
Okay. So let's talk about a few of these things, and we can sort of check through them. We gave the list and it's in no particular order, and some of them we've touched on. I mean, obviously you're going to tell people about you tell the family members that something happened.
Yeah, absolutely. Yeah, you want to notify all the family members and let them know that the loved one has passed away. Number two is important too. Seeing the emotional impact either on the surviving spouse or the close relatives. A lot of times the surviving spouse might not be the one that's been managing the finances. And so they have no clue on just paying some of the bills or running the asset allocation. And you need to gauge that and find out what can they take care of and what do they need help with taking care of.
That actually raises an interesting question that came in while we've been going through this. So for the surviving spouse, how do they figure out if they're the deceased spouse didn't tell them, and I'm sure they're mad enough that they'd kill them, but they're already gone. Pardon the pun. Is it the responsibility of an investment company to let them know, oh, incidentally, Bob died and therefore this, or even a life insurance company? If you didn't know they had a life insurance policy, how would you ever know to get one, to go look for it?
Yeah, well, yeah, I mean, the first
That's
for
part
the
of the hunt.
surviving spouse, they're gonna have to communicate, know where the important documents are.
So
Uh,
that's part of preparing and saying, hey, let's think this thing through. And while we, of course, are all immortal, at least Pete, we all die. And so it is, in a sense, being nice to the surviving spouse to say, hey, listen, let me tell you about what all's going on.
Yeah, it's one of the reasons why we're doing this workshop series, because when my father died, my mother had no clue. And we had no documents and didn't even understand their net worth. And so completely in the dark. And
in many ways, that sort of takes us to number 3 in terms of located estate planning documents and any other information. You have to know what the documents are to be able to follow the rules of either the will or a trust, or find out you don't have any. So
yeah, your trustee, your successor trustee has to, every one of the beneficiaries or a legal heir is going to now get a copy of your trust. So they really get to see who you love the most and who's most important to you.
And by the way, the probate code states that that the attorney sends out on behalf of the trustee what's called the 120-day notice. And this 120-day notice has to go out to immediate family members and to every person named in your trust document, so that they are aware of your death and they are aware of the existence of a trust. And so they're entitled to read the entire thing.
To a trust or just a will, or if there's nothing?
If there's nothing, then the probate court sends out the notice.
Right.
If there's a will, the probate court sends out the notice to everyone. Right. Under a trust, it used to be 10 years ago that it was completely private, that no one who was entitled to a copy of the trust, and there was abuse. So
there was a guy, there was a lawyer here who liked to name things himself.
Yeah. So today, everybody gets a copy of it. So remember that.
It's your estate until you die.
Exactly.
Then the family knows.
Yeah. And you can't do anything without a death certificate. Has to be signed by a physician,
which we're going to get to. So we'll come to that one. So arranging for care for dependents or pets.
Yeah.
If there are any of those, you notifying the doctor or the coroner. I mean, obviously the coroner may be involved in terms of how this is going on. Yeah. How about the security for the residents? What do you mean by that?
Yeah.
What's the first thing you do, Richard?
I change the locks on the door right away. The first thing I do, I'll bring a locksmith with me. We'll go and change the locks on the door. And the main reason is I have no idea who has a key to the residence.
But your beneficiaries just want to go pick stuff up.
Well, yeah, that's funny too, Don, because
that's the point.
If sometimes you walk into the place and you see a big white square on the wall and the rest of the wall is a little bit darker shade of paint, and obviously there's a paint something's missing off the wall. So yeah, I mean, all that, and we got to have everything kind of secured and locked up.
And you got to make sure the gardener stays employed.
Yeah.
You want to make sure that there's a light on. You want to make sure that there's insurance on the house,
that you've canceled and redirected home deliveries.
Absolutely. The last thing you want is things to accumulate on the front porch showing that it's empty. We've had houses that looked empty where somebody went in and removed all the copper. It's just, you want to make the house completely look lived in. And the reason why is that the trustee is liable. Anything happens, the trustee has that fiduciary duty to keep assets secure. That's a reasonable thing to do.
So the next item 8 and 9, actually on the next page, express funeral and burial wishes and arrangement of mortuary, actually raises the question that we were asked. So let me bring that over here so I can read it. Just curious, if the dead person hasn't arranged, pre-arranged, and paid for a funeral, Who pays for that if the estate is going into probate or successor trustee is working with the trust? Who pays for it?
We try to put it on our credit cards and then reimburse ourselves sometimes. If it's through a cemetery, we just tell them, hey, you got to wait until we get some access to some monies, and that could be up to 90 days longer. These cemeteries and that type of thing understand, but they will
They live
pressure.
with this problem, don't they?
Yeah.
Sorry.
But they will try to pressure. I got the pun.
I know.
But they will try to pressure you into paying. There is no obligation for you to pay as the trustee or the executor, because you're not acting as a person. You're acting on behalf of another individual or
Right.
an estate.
And somewhat to the question that was asked earlier in terms of how do you find out what's going on? Item number 10, redirect the mail. Look at the mail. Look for bank statements, look for credit card bills, look for anything that's coming in, and ideally go in and look for an online presence also in terms of any of that type of information.
The online stuff is more difficult. When we close an account, because a lot of people do now online automatic bill pay. So we close the account and then eventually we will get the mail and it'll get forwarded. But again, a lot of times people think that because I have a living trust, hey, the administration part is going to be over with in a matter of 1, 2, 3 months. No, it takes any time from 6 months to at least a year.
As we'll talk about on a future slide.
Yeah. So
finding perishable foods, make sure that you aren't going to have things
Yeah,
rotting in the house. And
we had
those
a zero, one of these high-end $20,000 refrigerators that somebody never ever emptied until 9 months later after a person's death. You know, it's just
Sub-Zeros don't work after 9 months of bad food being inside. Why do I have to get a hold of anybody that has a power of attorney?
Richard, take that one.
So for a power of attorney, their role ceases at death. So it's only there for when you're alive, and they can do their function as your agent while you're alive. You know, whether that's with the automobile or the auto insurance, or maybe getting your required minimum distributions from your IRA. But you got to let them know that their authority is terminated, so they're not still doing any bill pay or banking after the person has died.
So the same thing's true of the advanced healthcare directive. Everything terminates,
except for the burial. So the burial is you still have a role to play as your agent under the advanced healthcare directive, and that's with the burial, and that ties in with any prearranged arrangements that you might have made or what your wishes are on that.
Yeah. By the way, this is important that if you're going to name different family members under the advanced healthcare directive, and that's different from the trustee, successor trustee, make sure they get along.
Yeah.
Because let's say, you know, the healthcare agent wants to bury you in one place and the successor trustee says, hey, we're not paying for it. What do? And it ends up in court. So a lot of times issues end up in court because of emotions. The family members finally, okay, now mom and dad are gone. Now I can tell you exactly how I feel about you. And they take it out on doing this probate administration or trust administration.
So Richard, what's your opinion on safe deposit boxes?
It's funny. I sometimes have cases where they might have 3 different safe deposit boxes, and the banks back in the day would give you a free safe deposit box if you opened up an account, and more often than not, they're empty. But it is very important, though. You need to bring someone else with you. You need another set of eyes with you so that you can take inventory of what's in the safe deposit box. Usually we don't find the keys. Sometimes we do find the keys. And if you don't, you have to arrange a locksmith to meet you there at the bank. And the bank has their own locksmiths. Usually last time I think it was $250. But very important though to have an independent person there with you, because you want to take inventory and explain to all the other beneficiaries what it is that we found.
Yeah,
in the safe box.
mom's diamond ring was not in the safety deposit box, as she said there would be. And that's the issue. We went to Chase Bank just the other day, and they're eliminating safety deposit boxes.
Yeah.
So
Yeah.
they're
So obviously finding life insurance policies and other things are terribly important to us.
Yes.
Yeah.
Let me click this guy.
Yeah.
Yes.
Why do we care about Social Security?
Social Security will pay $250 for burial expense. Social Security, if the first spouse dies, there might be better benefits going on the deceased spouse Social Security roll. Medi-Cal and Medicare, all of those bills will come in 3 to 4 months after someone's death, showing what the maximum that the deceased person's medical bill that you should pay. So you got to coordinate those bills with what the bills come from the hospital, etc. So yeah.
And Social Security may go ahead and, because of scheduling, make a payment to you. And if that went into your bank account,
automatically
they'll withdraw it, they'll claw it back.
Yeah.
Automatically claw back. So, employment, sometimes you have accrued final wages, retirement plans, deferred compensation, and they will not call you. So you have to call them.
Mhm.
And sometimes there's a small stipend on a pension plan that will go to the beneficiaries. But again, if I'm the successor trustee, they may not even talk to me.
Mhm.
And because if you're
You
on
might talk to Richard.
well, because what the reason why is because it's a beneficiary designation, and they will only talk to the individual that's designated on that form. And each institution is unique and has their own rules. So
So
there's-
sometimes you're in the role of just giving the contact information to the institution. This is where Sally lives. Here's her phone number, and you let them reach out.
or have each family member call the institution and say, I'm such and such, am I named?
Yeah.
So, but it's you need to investigate it.
So a lot of investigating in terms of veterans or fraternal organizations. If there are insurance things or other subscriptions to get rid of.
You would
What's a notice of public petition to administer a state?
Just I just wanted to go back to 20.
I know.
It's not easy to cancel stuff. You think it would be easy to cancel a mobile phone. No, they want to see the document. They want to see the return of the equipment. It takes time. And that's what I want to emphasize. Whoever you name, understand that it takes time for them to do it. This is not rocket science, okay? To close out a phone. It just takes time, and you got to follow their rules. Notice of petition to administer the estate. What is that, Richard?
That's what you've got a duty to notify a local newspaper
Under the probate code.
Yep. And so that's what we see in obituaries. So that's the obituary is satisfying that notice. Yeah, it could be, I've heard of some stories of people that wanted to keep it more private, and so their notice was on the Catalina newspaper on the island of Catalina. So sometimes it's just a matter of a mechanism that you have to do. And I think the idea there ultimately is that friends and families would be notified if they read the paper and if they read the obituaries.
But the other part of it, and you don't actually have to write up an obituary. It's more of a notice than a requirement for an obituary, correct?
Right. That's
Right.
correct.
But the other key part in terms of the notification is it's also notifying creditors. because you have a responsibility to identify creditors and to pay as appropriate. So
Yeah.
if I have everything in a living trust, do I need to have a post a notice in the newspaper?
No,
the question.
you don't. You don't need to, because that 120-day notice went out to immediate family and those who are named in the trust.
What about
However-
creditors? Creditors.
However, that's
Thank
up
you.
there. However, there's a however in here. If you want to cut off creditors, then you have to follow a similar probate procedure of providing notice in a public newspaper. So creditors are huge. By the way, your debts die with you. So your family members are never going to be responsible for your debts. If you have a lot of debts, I would probably go through the probate process versus having a living trust, because you have a probate court, a judge, giving a judgment order saying this case is closed. So if any creditors pop up anytime after that, they have absolutely no recourse.
If I have property in other states, do I have to do the petition notification in each state?
Every state has their own probate court, just like every state has their own driver's rules. So speed limits are different in states. Probate codes are different in every state. Every state charges different. So in some states, it's just better not to have a trust and to just have a will. Every state where you own property, if you have a living trust, the living trust controls. So automatically, if you own property in Arizona, Nevada, and Hawaii, and California, it's almost an absolute necessity to have a living trust.
Okay, so investigating investment accounts, retirement accounts, other things, obviously figure out where the assets are. I mean, that all goes along with marshaling assets.
Right. What I would say is, and I advise everyone to go on unclaimed properties here in the state of California. Just Google unclaimed properties. Unclaimed properties are a place where assets that have not been marshaled by a family member and an institution doesn't know where to send them, goes to the state of California unclaimed properties website or their office, and you can claim them as an executor or successor trustee on behalf of the individual. We always check on that with every estate that we have, whether it's a trust or probate.
And another good point too, I think for the trustor, when it comes to investment accounts, you want to keep it simple and easy to find. So if you're not getting paper copies of your statements, you need to let your successor trustee know so they could find these accounts.
Let's go to the next slide.
I did.
Oh,
Look at the screen. No, I'm sorry. It's one thing when this is the 6th week, Pete. Why should I retain an attorney or a CPA?
oh man, it's just a necessity. There's so much liability. It's fiduciary liability. If somebody accuses you of doing something wrong, the burden of proof on a fiduciary is to show that you did it right. All other kinds of negligence, the person who's accusing you has to prove that you've been negligent, not in this case. So the liability is enormous. A lot of times people wonder, why do we charge as much as we do for things that we could do ourselves? And part of it is because that enormous liability. Any attorney can step in and say, you didn't do it right, show us how you did it right. And that means we have to hire legal counsel because it's an adversarial system, to show that we did it correctly. So yes, definitely, if you have a small estate, more than likely you don't. Okay, so it's for the larger estates. We hire attorneys almost immediately after someone dies or becomes incapacitated.
So insurance, obviously, you need to shoot with insurance agent and deal with that. Death certificates are important because you're going to need a bunch of them. Almost every institution wants a death certificate and many times the originals.
Yes,
So, 10 or 50, you could ask the attorney how many to get, given the complexity that you have.
Yeah.
So we touched a little bit on decedent's property. Are there insurance issues when someone dies and the house is now vacant?
yep. Yeah,
They don't like insuring vacant buildings.
they hate it.
Mhm.
In fact, many of them will just not insure it at all. So,
And if they don't, that becomes the trustee's responsibility because they have to protect assets.
right. And so we have to go out and find an insurance company that will insure, and it's usually 3 to 4 times more expensive because it's empty.
So
So, by the
retitling the
way,
automobile.
in most people's estates, the house is the most valuable item. Be very careful as to who you choose to be the real estate agent. We all know real estate agents. The person who's in the neighborhood may not be the best real estate agent. You want someone, you're not acting on your own property. You're acting as a fiduciary for someone else's property. And there are different rules involved. There are different liabilities involved. So just picking out a real estate agent, you want to make sure that they have experience dealing with you as a fiduciary. So let's number
Retitling the automobile and whatnot.
piece of cake. 100% worth having an auto club membership.
Yeah.
40 days later with the death certificate, you could have it retitled. What if the car's on lease?
It's a pain, but again, you have to go to the leasing company and they will want the car. You got to figure out what's in the best interest of the beneficiaries. Is
Do you want to buy out the lease or do you want to turn back the car in? And
now,
that's the-
if you have a family member as the trustee, and that family member as a trustee wants to purchase that lease car, Richard, can he just go ahead and buy out the lease and put his name on the title?
No, it's got to be fair to everyone. So you got to have to disclose what your intentions are to everybody, and it can't be a financial advantage without being fair to the others. So you got to
Yeah.
work it out.
Yeah, they got to agree that you can buy it at X price. Okay, so having a family member as the trustee, the trustee family member has to put him or herself in the last position to benefit.
Mhm, mhm.
So preparing assets and the list of debts obviously is rather all-encompassing and a major part of this thing, revaluing it, whatever else needs to be done.
Everything
critical
needs to be revalued. If you own partnerships, they're absolutely unbelievably difficult to value. So keep that in mind.
Yeah, well, and also the step up in basis is a huge benefit. So valuing an asset at date of death, it's an immense tax savings. You want to get the appropriate valuation.
Yeah. And by the way, if you get 3 different appraisers, they'll probably have 3 different values.
Yeah.
So make sure that the person is qualified to give an appraisal, because everybody scrutinizes what that appraisal will be.
Mhm.
So if I had mentioned before getting death certificates, can a non-family member get a death certificate on someone?
Sometimes they can, depends on the county that they're in. Some counties require to have an official connection to the deceased individual. Every county is a little bit different.
So if I was a stepchild, I am in fact not legally authorized to
Probably
have one.
not, but again, depends on the county.
So if I'm a beneficiary designatee, I guess would be the term, and I need a death certificate, I have to go through the family to get a copy?
Sometimes you do, but if you're in a small little county and they know you,
If you're in Orange County, probably not.
Orange County, you're looking at formalities, lots of rules.
Okay.
Mhm.
Credit cards, follow them and don't pay them until you know that you need to pay them.
Yeah, you don't,
Yeah.
credit cards, and all contracts end on the date of death.
Yeah.
Uh,
Yeah, no more interest.
No more
Right.
interest.
Yeah.
And credit cards is a contract. You that ends on the date of death. So And not only that, we usually wait to pay off credit cards until the very last creditor to pay off. And then we ask them, what will you take, on the dollar? And usually they'll discount what you owe substantially.
Yeah, and sometimes they might even charge it off too if you wait long enough, if it's a low amount.
Yeah, you do not want to pay. This is not like when during your lifetime. During your lifetime, definitely you want to pay off that credit card as soon as possible so you don't incur any charges.
Yeah.
And that's another thing, that when you take over somebody's upon incapacity, you're doing all these same things.
Mhm.
Right.
You're putting everything in your own name as either the agent, the attorney, in fact, if it's just that, or as the trustee. So you're doing the filing of the income tax return, you're paying off the debts, you're reviewing all the credit card charges. All these things occur during your lifetime.
And a big issue in terms of like the estate tax issues, you may have normal tax returns at 1040, you may have a 1041, you may need a 706, which is an estate return. And that's why the accountant is very important to you in terms of what you're doing. So now all is said and done, we figured everything out, we've done all the timeframes, we do our distribution, we notify the beneficiaries, this is what you're getting and why, effectively, so that they're communicating with them at all times in terms of where we are. And as we've noted, valuable things don't always look valuable. Crummy things may be very valuable, and really good looking things may not be. And so make sure we're determining what the true value of something is.
Yeah, I have a fun time watching the Antique Roadshow on PBS, because that is, you always hear stories where, we have one here in Laguna Beach, when the hillside houses fell down to the lower street level. One of the houses was on the tippy end of going over, and one of the family members said, "Oh, we forgot that painting." And they ran into the house, grabbed that painting, and it turned out to be $450,000.
Good plan.
And they never realized that.
So now that we've done all of these things after someone's death, or as you say, incapacity, one of the things that we may want to look at is
wait a second, you missed
shoot.
36, the most
No, I
important
didn't.
one.
I did. I had said inform them of the distribution.
But see, you didn't go through with the
story.
pillow talk. What is pillow talk, Richard?
Pillow talk is, so you have one of the children as your successor trustee, and you have he has a sister, and the sister has a spouse, and the sister and the spouse are wondering why the brother has that brand new car, and where do you get the money for that? And he's handling mom and dad's estate, and do you think he's doing everything right? We should look into this.
Yeah, it's the pillow talk. So you've got to, there's a lot of times where nothing happens. It takes time to get into the probate court. Petitions, court orders takes anywhere from 4 to 6 weeks to 8 weeks to get, and nothing happens. The 120-day notice period, sometimes nothing happens. And so you literally need to tell the beneficiaries nothing is happening.
Yeah.
Yeah.
And remember the psychology of inheritance too. The beneficiaries are really excited about this money eventually coming in for them. They've made plans. They're thinking of vacations or RVs. So you want to be realistic with them and how long this process will take.
Yeah. So two comments incidentally. We talked about you don't have to pay credit cards, all contracts into death. Understand, and it's a very good question. A mortgage or a home equity loan is not a contract with you, it's with the house. And therefore you need to continue to pay the mortgage, and you need to continue making payments if there's a home equity loan against it, because that contract is with the house, not with the individual. You may have signed it, but that house is collateral, so that one you need to keep paying. And
excellent
just one other note, incidentally, Pete, that painting they went in and got, they paid $25 for it at a garage sale, was the comment that just came through. So just as a note for you, Pete. All right. Now
must be a Laguna Beach resident.
Correct, yes. Okay, what about a first spouse? Do we have to go through all this crud?
No, we don't. No, and thankfully not.
But it would be helpful if we had a properly titled trust and the will, and had all these other documents in place to make all these things easier.
Yeah. exactly. Yeah, it's the, and remember, if you've been married, 30, 40, 50 years, you're going to be in a state of shock at the time your loved one dies. And so don't make any major decisions. Get counseling if you need it. Be nice to yourself. This is a period of time where probably you don't want to listen to the oldest son telling you what to do. But from a legal point of view, there's not many things that need to be done unless you have a substantial, large estate. Then you need to get into the attorney's office. You need to, if you have subtrust in your living trust, those need to be handled maybe at that particular time. So get competent help is the main thing. So any of the attorneys that we've had on here, or ask Don, Richard, or myself, will be happy to refer you to an attorney.
Even on the first spouse to die, if there's no will, we heading for probate? Are we
Nope.
heading for intestate?
Nope, unless the individual had separate property.
Okay, so if it was all in community property, then that would
Or even
solve-
joint tenancy property.
or beneficiary designations or other things.
Exactly.
Okay.
Yeah.
Okay, let's go on.
Yeah, reality. It takes, well, right now, probate can take up to 24 months just because the Orange County court system anyway, with COVID, was decimated with employees. Open court hearings had to be done all by Zoom. So the time period is immense. A lot of times, and sometimes it's the assets that you own. If you have timeshares, you can't readily sell them. If you have limited partnerships, you can't readily sell them. So, or liquidate them. So it depends on the assets, it depends on the county that you live in. But needless to say, to administrate a living trust today is somewhere between 6 months to a year. It can take longer, but that would depend on the type of assets you have.
Can I clear part of it as part of a trust? So if I have these assets and we've resolved all these things, can I go ahead and distribute part of the assets, or do I have to wait until the end?
You can distribute under what's called a preliminary distribution, but when you do, you want to make sure as the trustee that you hold enough assets in the trust to meet any unforeseen creditor protection, any other foreseen invoices that may come through, etc. So you gotta have your business hat on when you're being a trustee, because you are constantly being asked by the beneficiaries how soon and how much.
Communications.
Yeah.
Keep talking. Okay. Jeez. I'm gonna write something down here. First time Pete was speechless.
Well,
What you get for having me write your slides, Pete?
Yeah, we're people hire a professional fiduciary a lot of times when there's trouble. And so we're kind of like the cop on the beat that we see kind of the negative things. And so in making it easier, we sometimes don't see this, but it's really true that, complete and sign a power of attorney, the durable power of attorney. Make sure your advanced healthcare directive is up to speed. A will, if there are no changes in the family, then there's no reason to update the will. Trust, yes, definitely, because a trust is, when you execute that document, it's valid and it's in play. So yes, make sure you keep that updated. Beneficiary designations, like Richard said, keep a photocopy of it and put it with your estate plan so you remember where those beneficiary designations and who you named. Inform your representative about your wishes. sometimes you have a family member and the family member doesn't know that they're being named. So I would suggest that you let them know, but then on the same time, remember, you're going to be happier and live longer if you stay in charge of your own money. And so sometimes kids, if they know they're named, then they try to take over. Well, mom, you're getting old and therefore blah, 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 blah. Or dad, you know, you missed going to the store and you're not eating right. So we need to take over. Try to stay in control, or if whatever representative that you've named, they should encourage you to stay as independent as possible. Prearranged funeral plans, I think they're a good thing. Usually if somebody is in the last stages of their life, I usually purchase insurance on behalf of the client, because it pays for everything, and you paid very few premiums on that insurance. If you want to, you may want to ask the family member, because I personally believe funerals are for those people who are alive. But again, it could be a very sensitive issue, and you may want to talk about it. And as Richard mentioned, the person who has the final legal authority is the one you named as your advanced healthcare agent. Recommended list of estate attorneys, accountants, and trust and investment advisors. I highly recommend it, even just to give them a call by your representative to see what assets you have and how you have those titled.
Incidentally, when we did this slide, that Pete was very happy that I put in the 3 dots, because there are a lot of other things. And I somewhat cynically, just kidding, put in don't buy overly ripe bananas, which someone just sent a note that their mother tended to buy way too many bananas. So they put a bunch of bananas in her casket. Perfect. Yes. I mean, and part of that's simply a matter of, you know, I used to joke, I feel so old I don't buy green bananas, but this is sort of the opposite of the story.
Yeah.
So anything you can do to make it easier. I mean, the questions we've had coming through, you know, what if I don't know about accounts? What if I don't know about insurance? The more things you can tell your spouse or whoever's going to be your successor trustee, the better off it is for them, and the easier it's going to be.
Yeah.
Now that we've pissed off all the family members, Pete, why should I hire a professional fiduciary? And that isn't necessarily you or Richard, no offense to the two of you. I mean, there's 1,000 of them in the state. The other could be, you can also hire a corporation to do it.
Yeah, there are corporate trustees out there.
For estates, they don't tend to do powers of attorney or advanced healthcare.
Yeah, exactly. And you got a corporation. Corporations have different personalities, but they don't die. So that's the good thing about corporations. And your fees are going to be between 2 and 5% on corporate trustees. So if it's and some will require a minimum. Most of them will require 1.5 million or more before they will consider a trust being a trustee. And they will not usually become a trustee if they see family conflicts, because they don't want to end up in court. So make sure that you interview them, at least 2 or 3, even if you consider a corporate. Why consider a professional? I think one of the main things is that there's no emotional attachment. We didn't grow up with the family. We have to treat by law every single beneficiary equally, no matter how annoying one of your beneficiaries might be.
Yeah. Yeah.
So this is not our first rodeo. We've done this before, so we know and what to expect when we call Wells Fargo and we have to go through 5 different people in order to get to the account. I think this is probably one of the most important.
Yeah,
we'll be willing we'd be willing to share that with the attendees. We have a vetted network of professionals. Lay people don't. We work with these people on a regular basis. We trust them. We know that they're honest. We know that they provide a reasonable fee for quality service. And that goes for a CPA, financial advisor, property manager, care manager, especially when someone is incapacitated. When somebody suffers from an incapacity, we work with the family members. So, and we want to have the help of the family members, but we take care of we don't take care of the emotional part of it. We take care of the administrative part of it. Richard, feel free to pop in.
Yeah, I agree, Pete. Having that network is vastly important, because we're using only fee-only fiduciary advisors. We see a lot of times that there's brokers involved and a lot of excess and fees and commission products that are in the asset allocation. And the care managers, we're usually stepping in during incapacity, and so having great options for care and great locations and different things to consider is also crucial.
There are, just to give you an example, there's 6,000 board and cares here in Orange County.
Mm-hmm.
There are probably, I would say, 200 to 300 certified estate planning attorneys. Mm-hmm. There are 10,000 financial brokers in the community. And the deaf business, and I call it a business, is huge, because we don't have a choice as to whether or not we're going to die. We're going to need somebody's services. And remember, when there's a deaf in the family, it's highly emotional. So, you need some steady. Can we?
Okay, Pete. So we're going to go through some questions now.
Now, could we bring up the screen as to?
I don't have it on mine.
And I cannot I cannot do this screen share.
You can.
No, it says I can't. You took it over.
Well, that's because I'm using it right now. But I want to ask a couple of. Okay.
Okay.
I'm going to stop sharing now.
Okay. All righty. Go ahead and answer the questions, and I'll bring up the resource list.
Okay. So, whoops, I'm having a problem over here. Okay. And we know the question, but I just want to make sure I answer it. Can a family member charge for their time against the trust as long as they notify the family members?
Richard?
Yeah, well, that's kind of, you got to make that choice. Do you want your family member to be paid or not be paid? I think they should be paid. It's a tough job.
So they're allowed, but the key is communications.
Communication, yeah. You want the other children, the other beneficiaries to know that you're going to be paid, and then also talk about what that amount is. I would say at least 0.5% to 1% would be a good rate.
Okay, so I almost feel like leaving this to the end because I think this could be a whole long story. As a fiduciary, have you ever received legal or personal threats by a beneficiary?
Yeah.
I know the answer is yes, they both have.
Yeah, I've seen it on both sides, and then I've also had some people that are really messed up kind of mentally, and they've had suicidal intonations. So you really wear a lot of hats when you're dealing with the children sometimes after the elders passed. Now
that people have watched this series, can a family member or executor trustee refuse based on a lack of knowledge or consent to the role? Could they say no?
Yeah.
You're not forcing someone to do it. You are asking them to do it.
Yeah, usually. Well, so successor trustee is in a hierarchy order. So whoever you pick first is kind of has first dibs. Then you're gonna have someone second and someone third. So your first person can what's called a declination. They could decline to act, and then it falls down to your second person, and we see what they want to do.
I finally got it. Here's a lot of times we get questions as to who do we call when there's an incapacity or when there's a death. The state of California has certified specialists, and the California Bar Association, there's a search. The specialties are elder law, estate planning and probate law, and taxation law. Sometimes we even use bankruptcy law because that's sometimes the best course of action. The national directory, we'd like the National Elder Law if it's out of the area. I use the National Academy of Elder Law Attorneys. I use them for two things. One is to possibly find a legal counsel for an elderly person. And two is I use them to find a professional fiduciary in another state or in another area, because the elder law attorneys use professionals more than regular estate planning attorneys. We use, when we serve with somebody who has an incapacity, we use people like the Aging Life Care Association. These are normally retired nurses, but they understand medications, they understand medical issues, and the Council on Aging is a not-for-profit. They're excellent. Professional fiduciaries, the state of California has licensing. You can go to the Bureau. I would recommend highly, if somebody you know is a professional, check them out on that website. There is an association for professional fiduciaries, and that's listed below. Please take a look at the note. Recommend you ask an elder law attorney for a recommendation for a professional fiduciary because they have worked with them in the past. Most professional fiduciaries who are licensed, license means minimum requirements, okay? Minimum. Most professional fiduciaries do not have a lot of experience in investment management. Richard, for example, is a certified financial planner, and it's an excellent background to be a professional fiduciary. But so ask, sometimes I would like individuals, which we always use is fee-only financial advisors. And there's a website to go to get that particular type of individual and let them get involved in picking out a professional fiduciary.
Pete, where's this document?
It's on our website.
Yes. The same as all the other materials, the material you just presented. We put this on here yesterday, the day before. So it is
exactly.
There.
It'll be
you don't
on
have
there.
to take fast notes.
And the other thing too is that we had heard back from some of our attendees that the website was having a difficult time downloading documents, and we have upgraded the website. So hopefully that's not going no longer to be a problem. Every single estate needs an accountant, okay? And make sure that accountant has experience doing fiduciary tax returns, because in the year of your death, you need to file 4 tax returns, and sometimes even more, depending on title of assets. So make sure they have experience in doing fiduciary accounting and those tax returns. And
incidentally, there was just a question in terms of what's the name of this document. It's on the website under estates, and it's called Finding a Fiduciary with Ask First Form is what it's actually called. So I'm looking at it, it is there. So
and the Ask First form is, here. There is a blank one attached to this. We recommend highly that you use it. It takes a professional less than 10 minutes to complete. But for example, if you have an attorney who's licensed in insurance and securities, you can make much more money recommending a mutual fund than you can drafting a document. So if somebody who has a license in another area besides law for an attorney, I would have a red flag come up or the antennas come up and go, why do you have a license in these areas?
Yeah, and real quickly too, both of these handouts, this handout here that we're looking at and our outline, you want to print those out and add those with your estate plans and whatever you have. Keep that with you, and whoever your agents are or your successor trustee, this is a very valuable tool for them.
Yeah.
Pete, why don't you stop, Pete, stop sharing?
Okay. Do.
There's also another one. If you look at that same section in there, there's a document that Pete had done one time on a state administration organizer. It's basically a list of phone numbers and contact people and all kinds of other things. We have a series of questions.
Okay.
We are out of time.
Trevor Murphy, if you're on there, you're welcome to come online. He's also.
What would you like to do, Pete? Do we keep going?
Yes, keep
Okay.
going.
So I'm just gonna check these off. Some of these have been here for a while, but I want to make
Okay.
sure we get back to them. Online savings accounts cannot be in the name of a trust. If you have a savings account in joint tenancy in the amount of over 184,000 in with the trust as beneficiary, have you triggered probate?
No,
Thank you. Is it good? Let me remove that one. Is it good or bad idea to add a name of a child to a checking account to be able to pay funeral expenses? Is it better to have the checking account owned by the living trust?
you can't. You can't. You're mixing. You can't have two titles on two.
Or would it be better to simply have it inside the trust?
Exactly. You're better
But
off.
the trust can't pay it because they can't distribute money.
The trust, if you have a checking account titled in the name of the trust, all you have to do is go to the bank and show the death certificate of the previous trustee, and then the driver's license of the successor trustee, and then the successor trustee can access that checking account.
So I do pay bills?
Yeah, and you can
Okay.
pay bills.
Um,
For joint tenancy is if you have a living trust, please put everything in the living trust on your checkbook. You don't have to,
Not
wait a
retirement
second.
accounts,
You
not
don't
life insurance.
have to have the name of the trust on your checkbook. But you should have the account in the living trust. It makes it so much easier for your successor trustee.
Subject is prearranged funeral plans. What if they don't die in the area where you had this done? For example, if you die in a car accident while visiting out-of-state relatives, can the trustee override their wishes?
No, they can't.
Okay,
And
and they'll transport the body.
And we just got through shipping somebody who died here in Orange County, wanted to be buried in Fresno. And so we just shipped a body to Fresno at a cost of $2,500.
Okay. I will ask this question as typed. When determining professional fiduciary fees, are qualified plans payable to named beneficiary included?
So if we have to be involved in that process, and depends on the size of the estate, it depends on the fiduciary who's doing it. So if it's a quick phone call, I never charge. If it turns into 2, 3, 4 hours worth of work, definitely will charge an hourly rate for that activity.
Okay. What happens if someone is named a beneficiary in the trust but dies? Is the trustee responsible for figuring out who should get that person's part of the trust?
Yes.
No, the trust should be. This trust document should state it, shouldn't it?
Sometimes it isn't. So you have to then look for the heirs. I've hired heir search companies as to because the people named in the trust have all died. And
Oh, I don't think they all did. No. If
no,
one of
I'm
the
saying is that I've had that experience where they have all died, and we've had to go after and find out all the heirs of the individual. Now, normal trust, by the way, if you have a living trust, there's 2 areas that you need to pay careful attention to. One is the trustee section. Okay, who do
I'm
you
sorry,
have?
I'm sorry, I just read a note here that is it a requirement for professional fiduciaries to have a mustache and a beard? I'm sorry.
It is. We
Okay.
required as professional fiduciary services.
Okay,
All
sorry.
of us have to have this, even the women who are professionals within our group.
Okay, but if, for example, in a trust, there's this collection of beneficiaries and one of them dies. And is it now up to the trustee to decide what happens to that portion? So I know of a trust that you've done where when someone died, that portion was excluded and distributed to others. Others will go to their benefit, to their heirs.
But yeah, the trustee, when you're a trustee of a trust, you're responsible for all assets in that trust. And any potential beneficiary of that family, of that grantor, can come back to you and say, you didn't do it correctly. You didn't find me.
Stop. Richard, how would you answer my question?
First, you're looking into the trust and see what that language says.
Yes.
Exactly what Don's saying. And then if there isn't a distinctive language in there, you're going to have to find a resolution.
Because the issue you're going to face is if someone has passed away and they have heirs, they have their kids underneath them. If you don't give it to them, or if you do give it to them and it's not stated in the trust, the other beneficiaries can come after you.
Yeah. And a lot of times, if there's conflict between the beneficiaries, then we as the fiduciary will say, hey, two people claim that their diamond ring that their mother left them is theirs. There's no title on the diamond ring. There's no notes in the diamond ring. We just had that issue with gold coins. We go to court and say,
Right.
Judge, you got the black robe.
Right.
You decide as to who it goes to.
Right. Yeah. Okay. So this is rather a long one in terms of the value of something and whether, if a beneficiary disagrees with how the successor trustee is administering the trust, they can challenge them and ultimately can go to court with it if it really is enough of an issue to them. Or they have the right to say, here's what all we're doing, here's what's happening. There's a question of valuation on assets.
Well, just overall, beneficiaries have total control.
Right.
And they can get rid of any trustee, whether they're a professional or a lay person.
Just have to go to court.
Sometimes you don't even have to go to court. You can literally go to the trustee's attorney and say,
Okay.
hey, we believe that the trustee is not acting in good faith. He's not following up. And if the person doesn't resign, we'll go to court.
Okay. Okay. We basically answered all of these to the extent that we can. Some of them are rather specific. I want to thank everybody. This is financial and estate literacy. This is It's Your Estate. This is week 6, trust administration. Thank you very much, Richard. Thank you very much, Pete.
And thank you very much, Don.
Yeah, thank you, Don.
The key, one thing I really want to emphasize again, all of this material is available on the website. The material you've seen, things we referred to, there are articles that Pete and others have put in there. Use the website as a resource because there's incredibly valuable information there, and make use of that. All of these things are very sensitive. In a sense, if you're looking at your estate administration, you're dead. And if you're afraid your kids are going to hate you and will kill you, you're already dead. So while it is your estate up until the time you die, and then it becomes theirs.
Incapacity,
yes.
Plan for the potential of incapacity because you're going to be alive and you want things taken care of properly if you've become incapacitated. At death, it works out one way or another.
Yes.
Yeah.
So I thank you all. I'm going to stop the recording.